Have you ever dreamed of having a tool, a trading tool, an investment tool, whereby in the privacy of your own home, you could punch it up on a Saturday morning, plug in your favorite symbol, whether again it is a futures contract, an ETF, an exchange traded fund like the SPY or the Qs, or even a stock, on an interval of your choosing, a daily swing trading basis, even a weekly basis, and get an objective, consistent review of whether or not you should be in that stock, out of that stock, and get an actionable list of stocks to buy in the future. Good morning. I am Bagger Don at Stock Market Caddy, CADDIE. It is Saturday, April 12th at about 9:20 in the morning. And over the next 10 minutes, we're going to review the major markets. 10 minutes. And we're going to do the S&P 500 and the NASDAQ 100 in 10 minutes. And I'm going to show them all to you. And I'm going to show you how SMC, Stock Market Caddy, the Swing Machine Plus Radar trading tool, investment tool, is positioned in all these markets. And as you watch this, I want you to know you get a view as a monthly member to Stock Market Caddy. You get a view as a monthly member every evening from Sunday through Thursday for just $100 a month. However, if you would prefer to have this tool on your desktop on demand for you, in addition to some 70 other tools, you can do so by becoming an annual member. And just ask yourself, if you had had this information in the last 30 days, how much money would it have saved you? How much time? How much angst? And if you have just a modicum of trading experience, especially around options and futures, how much money could it have made you? So let's get started. We're going to come here and we're going to change the interval from a 5-minute from our intraday view, and we're going to change it to a daily. It's this easy. And here we go. So let's take a look. The VIX, the fear gauge, it went long 32 days ago. 32 days ago. And yes, if you had bought the VIX futures, one mini, you'd be up 14,000. But more importantly, 32 days ago, it would have warned you. It warned our members, not me, the tool did, that the markets were under pressure and the markets were becoming fearful. Over what? Doesn't matter. They were becoming fearful. The S&P futures had gone short 34 days before. If you had short or gotten short the futures, one mini, you'd be up $31,000. If you had gotten out or protected your portfolio when it was at 60.22, you could have saved yourself a 10% drawdown. Another way to look at it. The NASDAQ, 51,000 back on February 26th, 33 days ago. Could have saved yourself a 12% haircut. The Dow, 35 days ago. Again, as an active trader trading a mini, you could have made 17 grand. If you did it with 10 of them, it was 170 grand. But you could have saved your Dow portfolio over 7%. The Russell, 78 days ago. 78 back in December. You could have saved your portfolio bear market territory, nearly 18% haircut. But Don, I like to buy stuff. That's fine. Buy gold. 65 days ago. If you had bought a mini contract in gold, you'd be up $50,000, $49,600. If you had bought the GLD, as many of our members did, they're up nearly 18% since January. 10-year Treasury, folks, the interest rates are rising on the 10-year Treasury, yielding 4.44. We'll save that for another day. That is the problem, not necessarily the tariffs. Oil, short 6 days ago. Bitcoin. If you want to hodl Bitcoin, that's fine, but why not hedge it? 43 days ago, Swing Machine could have saved your Bitcoin stack 12%. Ethereum has been hammered. They've lost 51% of their value. Could have been hedged. Active traders could have traded it short. Now, I promise you to look at the S&P 500. Let me show you how simple this is. We're going to add the S&P 500. Boom. And it's going to take a minute or two to load. And as that's loading, I'm going to remove this little symbol. I'm going to change the purse amount to reflect stocks. So we come here to Studies, Edit. I'm going to change from futures. I'm going to make futures false. We're no longer looking at futures. We're looking at stocks. So we say true, this difficult or this easy. Dollars per trade, $10,000. And here we go. Here are all the S&P stocks. This is the number of days since the last signal. Here is the percent return. This is the entry price, long or short, the time and the date, and of course, much more trend information for those that have an education about going after the trend. I'm going to show them all to you, but first, Moderna. 190 days ago, if your broker had you buy Moderna at 121, we would have had you getting out, or Swing Machine would have had you getting out. You could have saved a 78% haircut. AMD, a 37% haircut. Let me show you. These are all been sell signals, and you can see the dates and maybe find your favorite stock. Now, some of these are long. CVS, crazy enough, was a buy 58 days ago, 30%. CNP, 29%. Look at this one, Newmont, a buy 23 days ago. It's up 26%. Are you in Newmont? You might want to be. Down we come. So I'm going to go fast so you can slow the video down. I'll pause it but we're going to show you all 500. By the way, let's put a reference row in here so you can see the number of stocks. Going to come here to General, Reference Row. That's going to give me the number of stocks. So we'll come back down here. We'll start here and down we go. I promise to show you all 500. Down we come. Long and short. So out of 500 stocks, we are profitable in 393. We are flat in 404. The others, yes, we're suffering a drawdown. And what is our worst position? This thing at 11.8%. Not bad. what about the NASDAQ? I promise you the NASDAQ, I'm a little over, and that's my cat. Let's delete all these. It's taking me more time just to do this, but this is how easy or how hard it is. Just 10 minutes a week in the privacy of your own home on a Saturday morning. No subscription to CNBC, no Wall Street Journal, no chart, just actionable information to decide when you want to have money in the market, when you want to have your money out of the market. And let's delete this. Let's put in the NASDAQ 100. We have a symbol list from TradeStation. Boom. And there it goes. And that's my cat, Gracie. She's a calico. Check out this one. I hope you don't own this. On Semiconductor. On is actually off. 48% haircut. If you went short, you would have made 48%. Here's Tesla. When did Tesla go short? Back on February 6th. Could have saved yourself 32%. Let's scroll down. I want to maximize your time. Here is a long. What is this? Monster. 13%. O'Reilly Auto Parts getting long again. 58 days kind of makes sense. Up nearly 12%. This is a decision-making investment tool. Out of 100 stocks were profitable in 81, mostly short, but that could have saved you. Out of some 85, 85, lost my voice there, were either up or flat, and then yes, the others, we are experiencing a drawdown, and the worst one is just 13%. Folks, I don't want to hold you any longer. Remember, the most valuable commodity of all can't be bought, can't be sold, can't be traded, but it can be wasted. It's time. I'm here to help you maximize your time. I don't like to waste my own. Feel free to visit stockmarketcaddy.com. You can call me from 9 a.m. to 9 p.m. any day. Saturday, Sunday, Good Friday, Easter, doesn't matter. You can call anytime if you're ready to talk about the markets and how these tools might change your trading life. Happy to do that. You can reach me at 813-758-8263. Have a great rest of the weekend. Hope to talk to you soon.